Hi, my name is Jay Abalafi and I'm the founder of Lion Financial Planning. Today I want to talk to you about the difference between fixed and asset-based fees. Fixed fees are very straightforward. They're a flat fee that you pay for either hourly, project-based, or ongoing planning here at Lion Financial Planning. Asset-based fees are fees charged by an advisor that are calculated as a percentage of the total amount of your assets. Let's take a look at an example. So in this example, we're going to look at an account that is worth $1 million that's being invested over 20 years with an annual return of 6%. Let's say you're working with an asset-based advisor that charges 1% of assets under management. In the first year, that's going to result in a fee of 1% of $1 million or $10,000. If you're working with me here at Lion Financial Planning, we might partner together on a comprehensive financial plan in the first year that costs about $5,000. So in the first year alone, there's already a fee savings of about $5,000. In future years, if you're working with an asset-based advisor, again, you're going to be paying an annual fee that's assessed as a percentage of the total amount of assets in your account. So in this example, that's 1% of assets. And as the account value increases, so will that fee. If you're working with me here at Lion Financial Planning, we might work together on an hourly basis, resulting in an annual fee of about $2,000. And that fee is going to remain stable over time. So here's what this looks like. That 1% of assets under management is going to result in a fee in the first year of $10,000, but as the account grows, by the 20th year, that annual fee is already over $25,000. Whereas the $2,000 flat fee here at Lion Financial Planning is going to remain stable. This results in dramatic savings over the time period. So in 20 years, the cumulative amount of savings in this example is over $287,000 in fees. That's a great deal of money. And in fact, the savings is going to be greater if the amount of assets is larger, if the time horizon is longer, or if the annual returns are greater. That's not the end of the story, though. There are additional hidden fees when you're working with an asset-based advisor. The idea is simple. Every dollar that you spend on fees is one less dollar that you can keep in your investment account that is going to grow on a compound basis over time. That's the wonder of compound interest. Every dollar you leave in your account is going to grow significantly over time. So if you are paying higher fees that are growing over time with an asset-based advisor, you could lose not only out a lot of money on the fees themselves, but also on possible investment growth. So here's what this looks like. This is tracking the value of the account over time. At the end of the 20-year period, when you're working with an asset-based advisor that charges 1%, the $1 million value, the $1 million account is going to be worth about $2.6 million at the end of the 20-year period. Whereas if you're working with me here at Lion Financial Planning, the account value is going to be over $3.1 million. The difference between the two account values is the total amount of savings that you would receive in working with me here at Lion Financial Planning versus an asset-based advisor that charges 1%. That total amount in this example is over $471,000. So again, that's a lot of savings. And it highlights the fact that the total savings is more than just the savings on the fees. So here's the breakdown. 61% of the total savings is on the savings from the fees. $287,000 that you save on paying less in fees to me here at Lion Financial Planning as opposed to an asset-based advisor. 39% of the total savings, or over $183,000 in this example, is additional savings that comes from the added investment growth. Again, if you pay less in fees, you get to let your money work for you longer, and that compound interest is going to increase the account value and therefore save you more money when working with a fixed fee advisor versus an asset-based advisor. I hope this has been helpful. If you have any questions, don't hesitate to reach out. Please take a look at the additional resources on my website and have a wonderful rest of your day.